Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, we did see a wee bit of recovery from the lows, but still, it's a big cut that we're seeing across the indices, and this is after the levels that we saw yesterday, record high on a lot of indices. So it looks like profit booking par for the cause, but we've seen one down day and one up day, and that's been the trend. Even today, there was, it was a very steep fall, and the pace of fall was quite exaggerated, especially in the first couple of hours. But that seems to have abated for now. Quite a lot lined up on the show, so let's start off with the top headlines for the day. Stocks see a sharp sell-off across the board as concerns over valuations kick in. Indices marginally recover from the day's lowest point. Autos and metals are the biggest losers. Mid-caps under pressure. Emcure Pharma lists at a hefty premium of over 30% to its offer price of 1,008 per share, while Bansal Wire lists at near 38% to its offer price of 256 rupees per share. Both offers very heavily oversubscribed. Ashush Singhal, the MD of Mahanagar Gas, tells CNBC-TV18 that he's heard of a likely cut in excise duty on gas. Even as the industry bats for bringing gas under GST, he points to a sharp reduction in the Indian gas allocation as a pressure point. Okay, all right, those are the top headlines, and we'll be discussing all of them in greater detail as well. For the markets, it's a 150-point cut on the Nifty. Mid-caps are falling more, 400-point cut there. We have seen a recovery again from those lows. It has sustained at these current levels, but we'll have to see whether there'll be more recovery at this juncture or not. Bank Nifty underperforming yet again, 0.8% higher. All the sectoral indices are in the red today, barring Nifty FMCG. We'll also talk about and go across to Mangalam for that Asian Paints price hike story. But for now, it's looking like a down day. But the FMCG index, that is at the day's high. Vivek. The FMCG index doing quite well. So first up, I think we'll go across to Hormaz first. Hormaz is at the wall. He has all of the top mid-cap movers that are spiking in the session. So Hormaz, over to you.
It's not very often that you start off by saying that the broader markets are having a down day, but they are, even if there is a bit of recovery from the lows of the day. I'll start off with the losers then within the broader markets, and IEX finds a mention among the top losers in today's session, 4.5% lower, but Blue Star is seeing a very sharp cut in today's session, 6% lower, and at the lowest point of the day as well. Titagarh is seeing a bit of profit booking, and MCX continues to extend losses from yesterday as well, 4% lower there as well. Some bit of profit booking coming in some other segments as well. Fertilizers is one of them. Fact is down 5%. RCF, Chambal, NFL, all of them seeing losses in today's trading session of anywhere between 4 to 5%. Some of the other stocks that are moving in today's trading session, metals is the other space that is seeing some pressure. 2.5 to 4% cut seen in stocks like Hindustan Copper, SAIL, NMDC and Nalco. And stocks that are doing well on the back of volumes, and they are on the gaining side. And Indigo Paints is one of them. CAMS was up 9% at one point as off the highs of the day, but still trading with gains of 3% and with strong volumes as well. And Vardhaman Textiles also seeing gains of around 5.5%. And lastly, some other stocks that are bucking the trend in today's trading session. And RVNL continues to move, one down day, one up day, recovering all the losses from yesterday, 9% higher now. 5-Star Business Finance, Prism, Johnson and Manappuram also having a good day in today's trade. Okay, all right, a good day. So that is what's happening for the FMCG space as well. Thank you so much, Hormaz, for joining us with those names. Let's go across to Mangalam. There is a price hike by Asian Paints. Mangalam is here to tell us more. Mangalam.
Yes, so the most important part is that we understand from our sources that Asian Paints has gone ahead and increased its prices by 0.7 to 1% across the board. The reason why it is important is not because of the quantum of the price hike, but because of the fact that there has been a price hike after nearly 12 to 15 months. Remember, in the last 1 year, we had seen a decline in crude prices, input prices, as a result of which all these paint companies were going ahead and cutting prices to boost demands per volume. So there was a big gap between the value growth and volume growth of paint companies. Now that is coming undone slowly. This is a step in that direction. So 0.7 to 0.1% price hike should be looked at as, one of the many, because typically paint companies hike prices just ahead of the festive season. This time around, it has happened just before the monsoon season itself. So after 12 to 18 months, companies are looking at price hikes. Typically what happens is what Asian Paints does, everyone else follows as well, being the industry leader. So let's see whether those guys, increase their prices as well over the next couple of days. We'll get to know that. And the last important piece about this is that we have seen disruption in the paint industry because of the entry of a large player. So amidst that, if companies are okay to take some price hikes, this talks about the underlying sentiment, it talks about their strength, and it talks about the future in terms of recovery that we are hearing from all the other FMCG companies. So this is a step in the right direction. Don't just look at the quantum of 0.7 to 0.1% or 0.7 to 1%, but what it means for the entire sector is extremely crucial and a big positive.
Thank you so much, Mangalam, for that. Now we'll wait and watch by if others in the pack follow suit. But moving on, let's welcome Sudeep Shah, the head of technical and derivative research at SBI Securities, for a technical check on the market. Good afternoon, Sudeep. Good to see you. First up, what's your call on the market today? After a while, we've seen a bit of a sharp correction. Do you feel we can slip further?
Good afternoon, Vivek and Sonal. Yes, you're right. It's what's happened in the last few days is that within an overall uptrend, we have seen consolidation at higher levels, and Nifty has been consolidating between 24,050 and 24,400 thereabouts. From a Nifty standpoint, from here on, we feel 24,100, 24,150 zone will act as a strong support on the downside, because the 10-day exponential moving average will also come into picture. And while banking as well as IT is seeing some kind of profit taking from higher levels, we are seeing FMCG support the markets. So overall, it's going to be a market where we'll see sector rotation at its best, and we feel FMCG could continue its upside and thereby helping Nifty to limit its losses on the downside. So all in all, 24,100, 24,150 key support zones on the downside. Closer to those areas, we could open up buying ideas. And on the upside, 24,500, 24,550 is the zone where we feel Nifty could witness some kind of a resistance on the upside in the next few sessions.
And any individual technical picks?
Yeah, there are a couple of them now. While we're liking the FMCG index, one of the best stocks which we feel is doing good in the last few days is Godrej CP. Now, Godrej Consumer Products post a decent up move in the last 6 months, was consolidating at higher levels between 1350 and 1430 in the last 15 odd sessions. Today, we have seen a breakout at higher levels with volumes. So we feel from the current levels, the stock could be bought with a 1410 stop loss on the downside and 1500, 1520 targets on the upside. The second stock which we like is Life Insurance Corporation, which is currently at 1050. Now, post a strong move in November, from November 2023 to February 2024, the stock has been consolidating within a small range, say around 950 to 1050 thereabouts. And today we are seeing that there is a consolidation breakout on the upside. So from the current levels, 1030 could act as a strong support, which could also act as a stop loss. And this could be bought with a target of 1100, 1120 on the upside.
Okay, some moves in LIC as well. Thank you so much, Sudeep, for joining us with those technical bets. With that, we'll slip into a break. As we do that, a quick programming note. Will the RBI cut rates this year? Is RBI worried about a bubble in stock markets? Is India poised for a GDP upgrade? Coming up tomorrow, a CNBC-TV18 mega exclusive, the definitive RBI governor interview, only on India's most watched business news channel, CNBC-TV18. So stay tuned for that. Welcome back. You're still tuned into Mid-Cap Radar on CNBC-TV18. While we're talking about a lot of individual names doing well in the broader markets, royalty stocks, they're surging now, be it Keystone, Brigade Enterprises. We do have a lot of new kids on the block as well. One of them is Bansilwara, listed at near 38% premium to its offer price of 256 rupees a share. Nigel is here with the analysis, the valuations and more. Nigel.
Well, that's right. The management was looking to raise close to 450 crores. And unlike any kind of those OFSs, which sometimes the street gets a little skeptical about, here the entire money that they're raising was a fresh issue, which means all the money goes back to the company. Well, at the opening of the IPO itself, it saw solid demand. It was subscribed close to around 60 times odd. Why were they raising this money? Well, as it comes up for you on the screen, the breakup should come up for you. They were looking at repaying. Most of it was used to repay some loans, and also infuse some money for working capital requirements as well. So that's why the balance sheet will look far better after this. But now the stock, as you mentioned, is listed at a 35% premium. So how do the valuations stack up? Now, post this 35% premium in comparison to the IPO price, the stock is trading at, at not very, very cheap valuations at close to around 56, 57 times odd. If you look at a peer, Rajratan buyers, it's not exactly a peer. Why do I say that? Because Rajratan buyers, all the buyers that they make go to the tire industry, more than 95% of that. So on a like-to-like basis, actually, it's not an exact comparison. Though what works for Bansal buyers is, in size, it's much bigger than Rajratan buyers. Only the margins are relatively low at around 6%. But as the management told us, well, they are more focused on their return ratios and they're satisfied with the 6%, with the mid-single-digit margins that they told us. On a ROCE basis, both of them are in that vicinity of around 15 to around 17% odd. But why is the street excited and why are they bidding up the stock? Three big reasons. One is the money that they'll get, it'll be used to repay their debt. So point number one, the balance sheet will be in far better shape. Point number two, the current capacity is around 2.5 lakh tons, which is going to go to around 6 lakh tons. So more than doubling of capacity, which means there is a growth visibility and also there's operating leverage that will play out. And point number three, they're going to be commissioning the specialty steel vertical, which will demand higher margins. And they were sounding quite optimistic about the prospects. Close to 20,000 tons is what this vertical's capacity will be. What are the risks? They're not backward integrated. They're buying most of their raw material from the open market. So they are at risk with regard to supply as well as with regard to pricing out there. And as of now, the total export contribution is around 10 to around 15% if you look at it over the last 3 years or so. So the export market, if there's a bit of a slowdown out there, well, there could be, that risk. For the time being, the street is celebrating a 35% premium in comparison to its IPO price. Back to you.
Thank you so much, Nigel, for throwing light on the fresh listing. But there was another kid on the block that actually got listed today, and that is pharmaceutical company Emcure Pharma, which saw a bumper listing at almost a 30% premium to its issue price. Ekta joins us with all the details.
Well, yes, Emcure Pharma was in focus on account of its strong listing. And, the signs of a strong listing were already there. The subscription was around 67 times, with NII at around 48 times, QIB at around 195 odd times. The company raised around 582 crores from 48 anchor investors as well. Fresh issue of 800 odd crores, OFS of 1151 crores. They are looking to reduce 600 crores of debt from the proceeds, and the debt will come down to around 900 crores versus 1500 crores. 48% of sales from India, 52% from international markets, 13 manufacturing facilities. The margins in FY24 was a bit sluggish, so it came in at around 19% versus 20% year on year. Company has said that they've added on medical reps in the past 18 to 24 months, which really impacted the margins. Now, in terms of margins, if you compare it to the rest of the peers, it is on the lower side as compared to, the likes of Dr. Reddy, Cipla's son. Aurobindo is a little bit similar to Emcure. Now, in terms of a trailing PE, it's more expensive, it seems, on an FY24 trailing PE basis as well. Now, the company says that there is a second wave of capex of around 1,200 crores with 4 facilities which will get commissioned, which will aid margins. Sanofi and Emcure has also entered into a distribution pact, so it'll be interesting to see what that distribution pack for cardiology drugs will actually bring to the domestic business of this particular company. Chronic drugs, 45% of their business, and they expect it to be a growth driver.
Okay, all right. That is about Emcure Pharmaceuticals. Thank you so much, Ekta, for joining us and giving us all those details about this new listing. Moving on, at a recent conference with banking and financial company CFOs, the RBI raised a red flag against instances of internal accounts being misused. Ritu Singh is joining us with more details on what the conversation was around. Ritu.
Well, thanks for that, Sonal. The Reserve Bank of India again highlighting and raising concerns about, certain regulatory compliance lapses and other issues, raising concerns about certain banks without naming them, having lakhs of internal accounts which could be misused if not checked. Now, this was during an interaction with CFOs and auditors of banks and other financial institutions yesterday, where Deputy Governor Swaminathan said that RBI had found that certain banks had lakhs of internal accounts with apparently no valid reason. He said that some of these accounts were used as a conduit for fraudulent transactions and evergreening of loan accounts. Internal accounts are essentially accounts which exist within an organization, and they're used to transfer funds between the business units. So the Deputy Governor asked bank CFOs to bring them down to an essential minimum number and exercise greater control over them, because he said they are high risk in nature and have potential for misuse. He also urged the CFOs to invest in technology and data analytics and overall just do more to protect the integrity of financial reporting. Now, at the same event, you also had Deputy Governor M. Rajeshwar Rao, who stressed that disclosures were fundamental to transparency and urged lenders to improve the quality of their disclosures. Now, he highlighted that RBI's principle-based regulatory approach, for instance, asking auditors to thoroughly understand them in the first place and then ensure compliance with not just regulations but also their regulatory intent. Now, Deputy Governor Rao also pointed out that the implementation of principle-based guidelines in NBFCs has been found to be lacking, and he gave several examples. For instance, he said NBFCs' accounting disclosures often merely repeated the text of the accounting standards without really giving any insight into the assumptions they made or the methods they used in measuring the expected credit loss. In another instance, he said, ARCs, for instance, did not make any provision for management fees and expenses which remain unrecoverable for more than 180 days while they were calculating their capital adequacy ratios. So to sum up, RBI again cautioning banks to tighten controls and not misuse any regulatory flexibility that has been accorded to them.
Thank you so much for that, Ritu. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. The Nifty is down 180 points now. It is at the 24,200 mark. So stabilizing around those levels, but there is an indication there could be some fall from those levels. In the broader markets, realty names, they have surged. So something like a Keystone Realtors is up 5%. We have Brigade Enterprises, which is also surging in trade now, up around 3.5%. And we also have something like a Kolte Patil. That stock is doing well. We spoke to Keystone Realtors earlier today, and they did speak about good demand trends. Brigade also at the day's high. So that's all about the realty space, but the Q1 earnings season has kicked off. To understand and analyze the key expectations from the banking sector, we have Abhishek Kothari joining in. He's here to tell us all the expectations. Abhishek.
Banking sector's Q1 FY25 will be about the outlook that the management gives out with respect to how they see growth ahead in terms of deposit growth, because deposit growth is slowing down for the system as a whole. As on 14th of June 2024, as per RBI, the year-to-date deposits have actually declined by rupees 3.5 lakh crore or about 1.65% decline. So hence, deposit growth is the biggest challenge for the banking sector as of now. Loan growth as on 14th of June 2024, as per RBI data, was at 19.2% on a year-on-year basis, which includes the SDFC Limited numbers which have been merged with SDFC Bank, and around 1.7% with respect to quarter-on-quarter loan growth that we have seen for the industry. So cost of funds will continue to impact the net interest margin for the lenders. Hence, expect the net interest margin to decline for majority of the lenders. Banks will continue to lose out on their low-cost deposits, that is current account, saving account deposits. Hence, CASA ratio is seen at the lowest for many banks in years, as much as the lowest that they are seeing in last 8 to 10 years. That is why, with decline in net interest margin and lower treasury gains, expect the operating profit growth to be on the slower side too. So barring seasonality, asset quality is not much of a worrisome factor for the lenders in Q1 FY24, FY25. However, watch out for the pain coming in from the microfinance or the rural segment for the lenders. So recovery from bad loans had been driving the earnings momentum for PSU banks largely. Now it may be on the muted side in Q1 FY25, and that can actually have an impact on the earnings of the banks as well. Having said that, the best of return ratios is clearly behind for the banks. Now key estimates coming in from Kotak Securities are, for SBI they expect NII growth of 8.6% YOY and about 1.5% sequentially, while they are expecting the profit of SBI to decline by 10.6% YOY and 27.1% sequentially. So for Bank of Baroda, Kotak Securities estimates NII to be up 5.3% YOY and a decline of 1.8% quarter-on-quarter. Net profits are expected to be up 0.7% YOY and a decline of more than 16% quarter-on-quarter. Now for SDFC Bank, I have taken only sequential numbers because of the merger of SDFC Limited with the bank. So they are expecting NII growth of 3% on a sequential basis, while net profit to decline by 2.7% quarter-on-quarter. For ICICI Bank, Kotak Securities estimates NII to increase by 5.2% YOY YOY and about 0.4% sequentially, while the profits are expected to be up 8% on a YOY basis and a decline of 2.5% sequentially. For Axis Bank, Kotak Securities estimates NII growth of 8.9% YOY and a decline of 0.5% sequentially, while net profit is expected to be up 4.2% YOY and decline of more than 15% sequentially. Back to you.
Thank you so much for that, Abhishek. A very important quarter. Q1 will be for the entire BFSI pack. But that's all the time we have on this edition of Mid Cap Radar. Your stocks when we return.